Hello everybody, very good evening. Hope you all are doing really well. Please confirm me on the chat box if I am audible and visible clearly or not. Yes, I can also see the video. So yes, please confirm me on the chat box if I am audible and visible clearly. Yes, I can see that I am audible and visible clearly. Thank you so much. Thank you so much. Now, I would like to understand from all of you that what are your queries in the first few chapters of AAA, and in the meantime, thank you so much Mr. Mike Ross for sharing your queries. Now, what I will suggest is these are those queries, I have already gone through these queries, and these are those queries which require little discussion, little interaction. So, I would really request you to please join the Telegram group and post these queries as a DM in the Telegram group or in the Telegram group itself. Okay, then we will have a discussion and resolve these queries. Okay, yes, any other queries that you have? Okay, no, perfect. Okay, so very good evening everybody, hope you all are doing really well. I welcome you all to this first session out of a total 10 sessions that we are going to conduct before March 2026 examinations, and we are going to cover everything here. That is, we are going to cover revisions of all the chapters, we are going to cover the question solving sessions, we are also going to conduct 1 to 2 tests where we are going to evaluate your answers for free. It does not matter whether you are my existing student or not, these sessions are going to be conducted in YouTube live only, so everybody could attend. And for the notes and for more discussions, what you can do is you can join the Telegram group. So my dear friends, today is our first session. We have already concluded first session of AA, and today is our first session for AAA subject, right? Now my dear friends, when I talk about AAA, we are going to use the summary notes that have been created by me. There's a beautiful index that has been created over here. The total notes is up to 247 pages, and today we are going to take up chapter number 1, 2 and 3. If I go towards the index, we can see that chapter number 1 is summarized in 22 pages. Chapter number 2, that is money laundering, is summarized in around 10 pages, and code of ethics for professional accountant is from page number 34 to page number 65, and we have a target to complete these 3 chapters. However, we will not do hurry in understanding these chapters. We will understand everything very nicely, very properly, so that we can have an utmost preparation for our examinations as well. I hope that is clear. Yes. Now, about the doubts, what we are going to do is we are going to complete one chapter, then we are going to discuss all your doubts regarding that chapter, and then we are going to move towards the next chapter. Okay, we are going to take a 1 minute break also in between, so that we can just re-energize ourselves and move towards the next chapter. Now my dear friends, let's quickly start with the first chapter, which is chapter number 1, International Regulatory Frameworks. And under that, the first heading is International Federation of Accountants, which is also called as IFAC, right? Now my dear friends, we already know about the mission, vision and the functionalities of this IFAC, but let's have a quick discussion about it. When I talk about the mission, its first mission is to serve public interest. Now how do they do it? By contributing to the development, adoption and implementation, not just development, they help in adoption and implementation of international standards which are of high quality and guidances, contributing to the development of strong professional accountancy organizations. But sir, why are they doing so? Because they have a vision to develop global accountancy profession as a recognized value leader in what? In developing strong and sustainable organization. That is what they want to do. They want to develop global accountancy profession as a very valued leader in developing sustainable organizations across the world, financial markets as well as economies. Now my dear friends, this is a very good vision, right? If I talk about the vision of IFAC, I am really impressed, because they do not just want to set up the high quality standards, they want to set up themselves as a valued leader in attempting and in developing sustainable organizations, financial markets as well as economies. That is a really great vision. And how will they do it? They will do it by contributing to the development, adoption and implementation of high quality international standards of accounting and auditing. Now my dear friends, let's discuss about the scope and development of ISS. When I talk about the scope, we have to understand one thing very, very clearly, that whenever we discuss about the scope, we have to have one thing very, very clear, that all of these standards are mandatory to follow. It is not something that you will follow according to your wish. What you need to understand here is that all these standards needs to be followed appropriately, and then only we can say that we have complied with the requirements of ISS. My dear friends, I am keeping the pace a little faster so that we can cover maximum coverage within minimum timings and to the best of our capabilities. So what we have to understand is that these sessions are going to be a little fast in pace, but we are going to cover everything with the minimum timing possible. Okay, so now my dear friends, let's discuss about that. Are these standards important? Yes. Are these standards mandatory? Yes. What if I have not followed one or two of these standards, but I have followed all other standards? Can I say that I have complied with the requirements? No. So all standards relevant to audit process for an assignment must be followed. That is, there is no choice that has been given that you can skip one or two standards. Now ISS requires auditors to use their professional judgment when applying them. That is, it is not just that you have to put on the blinders and then you have to apply it. No, you can use your professional judgment. For example, if there is a choice that is given, say in the sampling part, you have to apply your professional judgment to decide what is the best course of action over here. Then in exceptional circumstances, you will have to explain why that circumstance is created or considered as an exceptional circumstance. You can deviate from the requirements of ISS, but you will have to justify it in your working papers. You can depart, but you have to justify it in your working papers why you have departed from the requirements of any of the ISA. Now, what is this red color for? These are for important pointers. Red color, green color are for important pointers. An auditor can only state compliance with the ISS when all the standards relevant to the specific circumstances of the auditing have been complied with. All these standards have been complied with? No. All these standards that are applicable in the scenario have been applied with. Even if one standard is not followed, then you cannot say that you have complied with the requirements of ISS or the audit has been conducted in accordance with ISS, right? I'm sure that if you are attending these sessions, you must be aware about the requirements of ISA 200. So there one important factor is to report as per the standards on auditing, international standards on auditing. So here you cannot say that until and unless you have followed all the requirements. Okay. Now my dear friends, let's discuss about the development, how these standards are developed, When I talk about the development of these standards, what is more important to understand over here is that the project is proposed and input is sought. If approved by the relevant committee, then project is assigned to a task force. What task force would do? Task force would research and create one exposure draft. Then they will release that exposure draft on the IFAC website and invite comments from members and interested parties. Then those comments would be considered, and once those comments have been considered, then draft would be revised or reissued, and finally it would be considered as a standard and issued as a standard, right? Do you need to remember this? Yes. Sir, can this be asked? Yes. But do you need to remember word by word? No. You have to understand the process, but you can change the word here and there. And what you have to understand is there are certain words that cannot be changed. For example, research. For example, task force. For example, comments. For example, draft. For example, ED. ED as an exposure draft. Okay. Now, my dear friends, let's discuss about some of the standard setters over here. So, some of these standard setters are being described over here. Do you need to remember word by word? No. Should you know that there are these standard setters for examinations? Yes. Now, FATF. What is FATF? FATF. So, what I have done is I have mentioned the full form in the first line of every such place where I have used the abbreviation. So, Financial Action Task Force. Here you will get the reference of it in chapter number 2 as well, when we will discuss about the money laundering part. Now, purpose is to do what? Develop and promote national and international policies to combat money laundering and terrorist financing, and that is why you will get a reference of it when you go for chapter number 2, that is money laundering as well. Now, IASB. What is IASB? International Accounting Standards Board. International Accounting Standards Board, as the name suggests, what would be the working of it? To create the international accounting standards, right? So, committed to developing high quality, understandable and enforceable global accounting standards. So, auditing standards, there is a separate committee for that. Now, cooperates with national accounting standards as well. For example, in India, India's is created based on IFRS, and they will be working with this. What is this? IASB. Okay. Now, IASB is responsible for developing and approving international financial reporting standards, IFRS, that you must be studying under FA, FR as well as SBR syllabus. Now, IAASB. Now, this is very, very important for us as audit students. International Auditing and Assurance Standards Board. International Auditing and Assurance Standard Board, IAASB. What they would be doing, as the name suggests, they would be developing high quality international standards on auditing. So, supervised by IFAC and subject to oversight of PIOB. What is this PIOB? PIOB, Public Interest Oversight Board, which is more prevalent in UK and international parts. Now, issues high quality auditing and assurance standards. So ISAs are issued by them, yes. What about ISQM? Yes. Okay. Now, IESBA, this is ISBA as in ethics, right? Do we study ethics? Yes. Our chapter number 4 is ethics only. No, chapter number 3 is ethics, right? Now, International Ethics Standards Board for Accountant, ISBA develops ethical standards and guidance for use by professional accountants. Now, OECD, what is this OECD, Organization for Economic Cooperation and Development. This majorly looks for the economic well-being and social development of the people, not just the organization, of the people as well. So promotes good governance and corporate activity. So this you must have studied. If you have studied AA and not claimed the exemption, this you must have studied under corporate governance, right? So helping governments by providing service and reviews of key economic areas. Now, public interest. What is public interest, sir? What is public interest? How will you define public interest? Public interest is the collective well-being of the people, right? So for example, if I talk about that these lectures are being issued on YouTube for the public interest, then collective well-being of a group of society, the ACCA students, right? So the collective well-being of the community of people and institutions the professional accountants serve. Here if I say that these lectures have been made free on YouTube for the public interest. So public interest as in what? The ACCA AA and AAA students, right? Now the accountancy professions public consist of clients, governments, employers and employees, investors and lenders, the business and financial committee, other stakeholders. So we can say that if we have to talk about public equals to stakeholders over here. If you have to define public, you have to define stakeholders. My dear friends, if you like these lectures, please hit the like button, please subscribe the channel and please share these videos with other ACCA students. They might not be attempting AA or AAA right now, but they might be attempting in future, right? So please share this video, please share this channel with them, and also join the Telegram channel and the WhatsApp channel for all updates, okay? And please do not forget to turn on the notifications, because a lot of you miss out on the notifications and then you say that, you know, sir, if we would have been made aware about this notification, we would have joined the session. So it's better that you keep the notifications on. Now, let's talk about bodies. So what are these bodies? These are PIOB and PCAOB. But sir, these are same only, right? PIOB and PCOB. No, my dear friends, PIOB and PCOB are very, very different. We can say that these are twins, but these are twins of separate countries. Okay, how? Public Interest Oversight Board, okay, oversees IFAC's auditing and assurance, ethics and education standard setting activities. That is for PIOB. Okay, it believes it is in the public interest to produce international standards that cover all aspects of the audit process. That is, it should not be created, the standard should not be created from the point of view of just one part, say controls, say reporting, say ethics, say independence. No, it should cover all parts of the auditing process to produce high quality standards. They do not believe in creating the standards, they believe in understanding, doing the research and then creating high quality standards which are in favor of all the stakeholders. Then standard setters act independently and are responsive to emerging needs. That is, there should not be any standards which are only created for the purpose of creating it. You should continuously read the market structures, you should continuously understand about the newer development and requirements and needs, and then you should develop the standards for those as well. To promote compliance with IFAC standards by member bodies, that is, whosoever are the members of these IFAC bodies, you should have more and more compliance structures to ensure that these standards are followed at the ground level as well by the auditors as well as all the stakeholders. That standard setters are open, transparent and responsive to the views and needs of all users, and that is the reason why exposure drafts are first of all issued, then the comments are invited, and then after that the final draft is issued, because it might be difficult to revise the standard once it is issued, but it is very much easier to understand the requirements of the stakeholders, the views of the stakeholders by issuing one exposure draft. Now PCAOB, it's like a twin of a different country because it is Public Company Accounting Oversight Board. This is created by Sarbanes-Oxley Act, but sir, this is in America, right? Sarbanes-Oxley Act. Yes, this is in America to oversee the auditors of public companies in US. To oversee whom? Auditors, not the companies. Of whom? Listed companies in US. So to see what? Oversee auditors, public companies in US. That is why I'll say that these are twins but of different countries. Now created to protect investors and public interest by promoting informative, fair and independent auditors report. It includes, but sir, do we need to understand it? We are not understanding from US point of view. You should ideally remember, not in exact words, but you should ideally understand the governance and scope and differences between PIOB and PCOB. Okay, now it includes registration of auditing firms or companies, auditing firms, okay, public accounting firms, setting US auditing standards, inspection of registered audit firms, and enforcement of SOX and the rules. Now my dear friends, these are not very important for you to remember. So if you are watching these lectures at the end and you are not able to remember this, it's okay, you can let it go. But if you have time, please remember it, not in the exact words but in the overall terms. Now UK FRC, what is this FRC, sir? FRC is Financial Reporting Council, okay. So Financial Reporting Council, FRC is there, UK's independent audit regulator, possible for promoting responsible for promoting high quality corporate governance and reporting. Now FRC, you have to understand this line by line, okay. This is really important for you. The FRC, okay, promotes the UK corporate governance code and UK stewardship code. Now my dear friends, this is something that you generally study in AA, right? We discuss about the stewardship code, we discuss about the corporate governance codes as well. It sets the professional standards for corporate reporting, auditing and actuarial practice as well. Represents UK interest in international standard setting, that is, like we have said that IFAC has many member bodies, right? Now there might be certain institutions, certain committees where UK might also be a representative or member. So there, this UK FRC gets enrolled as a member and they represent the interest of UK over there. Oversees the regulatory activities of the actuarial and accountancy professional bodies. Operates independent disciplinary arrangements for public interest cases involving accountants, auditors and actuaries. So for the lines that you are just reading, do we need to remember them line by line? No. Why I am reading this? So that we do not miss out on it. But I am covering all the important pointers, so you do not need to worry. And do not worry, even if you do not create the notes, I will be happy to share these notes with you, so don't worry about it, okay. Now impact of ebook, okay. So what you can do is, if you want the notes, you can reach out to me, okay, and I would be happy to share the ebook with you. Now impact of corporate governance on audit and assurance practices. Impact of corporate governance on audit and assurance practices. Is there any impact? Is there any impact? What do you think? In the meantime, I am just going through the chat box once, just in case if you have any queries, please feel free to let me know. Okay, about the notes, thank you so much. I hope you are liking the notes. So what I am going to do is, I am going to share the link of the ebook with you. Don't worry about it, okay. Yes. Okay, now the system by which organizations are directed and controlled, that is the definition of corporate governance. Why corporate governance is important? Why corporate governance is important? See my dear friends, when I say corporate governance, it's not a separate concept from auditing, okay. The greater the effectiveness and efficiency of the corporate governance frameworks, the better would be the auditing structure as well, because corporate governance ensures the quality in management, governance and implementation of policies of the organization. If these are really effective, then definitely when we talk about the auditing standards, they will be more effective. They will be more effective at the ground level also. So how the organization decision makers act, decision maker as in TCWG and management, how they can or should be monitored and how they can be held to account for their decisions and actions. My dear friends, whenever we discuss about the top level management, as a company, there might not be very much policies or too many policies on governing their structures, governing their decisions, because these people are the boss of the company, the head, the topmost people of the company. So what happens is, corporate governance places reliance on their work, but it also creates certain structures through which they would also be responsible for their actions, for their decisions, and there would be an eye on their decisions and working structures as well. Now it is followed on the basis of comply or explain or rules based. There are two approaches on which corporate governance frameworks could be framed. What is comply or explain? Comply or explain as in, even either you'll have to comply with the provisions, and if you have not complied because of any reason, be it a normal reason, be it an exceptional reason, you have to explain that you have not complied with it and why you have not complied with it. But when we talk about the rules based, it is legally required to follow these standards and follow these guidelines. So comply or explain. Regulatory authority issues standards. Directors of listed companies are expected to comply and disclose in FS. All companies, no, but all companies could make it applicable based on their best interest. Okay. Now non-compliance must be clearly disclosed and explained, where in the financial statements, in the auditor's report, in the annual report of the company. Rules based, required disclosure in annual report. Importance of balanced board, need for non-executive directors. These are something that are driven by rules based and it has to be followed. For example, need for NEDs. Every listed company has to go for some of the non-executive directors. They have to appoint some non-executive directors, and that is a rule. You cannot say that we were not able to hire and you can explain and let go. No. Now, need for robust procedures in appointing directors. That is why there is nomination and remuneration committee, how the directors would be appointed, how they would be moved. Merits of AC. AC as an audit committee. Okay, it's not air conditioner. Merits of AC, audit committee. Then need to monitor effectiveness of internal controls. This is generally delegated to the audit committee. Now UK code main principles. UK code main principles. So UK code, corporate governance code, is set up by the FRC that we have discussed. UK FRC is there, which sets out the UK corporate governance code. It applies only to listed companies, okay, but other companies can make it applicable. Yes, based on their best interest, they can make it applicable. It takes comply or explain approach. That is, either you will have to comply with all the requirements, or what you will have to do is you will have to explain why you have not complied. It has 5 components: board leadership and company purpose, division of responsibilities, composition, succession and evaluations, audit, risk and internal control, and remuneration. Okay, my dear friends, now what I would like to suggest here is that these 5 things have been explained in detail in the lecture that I have conducted yesterday for AA. Okay, so what I am going to do is I am going to mention the link of that particular chapter along with the timestamp in the description of this lecture, and you can watch it over there, because this would be just the repetition of what we have covered in AA as well, because it is exactly covered in AA as well as AAA. Okay, so what you can do is I am skipping from page number 12 to page number 22. Okay, 12 to 22, these are the pages that are already covered in AA syllabus, and we have already covered a detailed lecture on that. So what I'm going to do is I'm going to mention the link in this description box where you can see this. But if you have any questions in these, please let me know. After that also you can post the queries, don't worry about it. It would be covered somewhere in 15 to 20 minutes only, and I would be mentioning the timestamp also. Now, just in case if you have any queries, please feel free to let me know. I can read your chats now. Yes, I can read your chats now. Yes. Yes. Why I'm doing so? Because it is very important for you to revise the corporate governance chapter. Okay, it is a separate chapter in AA syllabus, and since a lot of you might have claimed the exemption, but when you come to AAA, there are questions asked from the corporate governance structures also. So I would be mentioning the timestamp. I'm going to share the link of the lecture as well, so that you go there and study chapter number 3. That is one of the key important chapters that you should not miss from AA. So that would help you to bridge the gap between AA and AAA. Yes. In the meantime, if you have any queries, please feel free to let me know. I can read your chats now. Yes, I can read your chats now. Please tell me any queries. Any queries? Any queries, my dear friends? Yes. Okay, this is great. Now let's go for chapter number 2. Okay, let's go for chapter number 2. Sir, we were supposed to take a break, right? We will be taking a break after chapter number 2. This is a 10-pager chapter, will roughly take 20 minutes for us to cover, because this is one of the key chapters of your AAA syllabus. Every time this question is, or this chapter is asked for at least 8 to 10 marks in your examination, either directly or indirectly. Why? Because this is one of the most important chapters of your AAA syllabus, money laundering. This is something that you are going to study for the first time. You might not have studied about money laundering in any of these syllabus, and here this chapter is not covered from the point of view of audit only, but this is a special chapter because all the concepts regarding money laundering is covered in this chapter, and that makes this chapter very, very important for all of us. Okay, so now chapter number 2. Okay, chapter number 2, money laundering. Chapter number 2, money laundering is there. Chapter number 2, money laundering is there. Okay, chapter number 2, money laundering is there. Definition. Just in case if you have any doubts, you can post anytime. Don't worry about it. Okay. Now, definition. Please try to understand everything in detail for this particular chapter, because this is really, really important. Okay. Definition. The process by which criminals. This is a process number 1. Criminals number 2. Attempt, not do, attempt. Let us try to do. conceal the true origin and ownership. That is, they do what? They try to conceal, that is hide what? True origin or ownership, either origin or ownership of the proceeds of their criminal activity. Okay, proceeds of their criminal activity. Fifth one, allowing them to maintain control over the proceeds and ultimately providing a legitimate cover, that is control over the proceeds. Sixth point, and providing legitimate cover. Seventh point, for their sources of income. Now my dear friends, this whole definition is very, very important. Please, please, please remember this. Please remember this definition. Now why do I say that? Why you should remember this definition? Because this is one definition that you cannot create in your own words. Even if you create, you might miss certain pointers, because see, in single line of 4 or 7 lines, instead of 7 or 8 lines, you will find 7 or 8 important pointers, and you will have to write everything in the right sequence only. And that is why it is important that you understand every word of it, but you also remember it for your examination. Okay, because this would be easy marks if it is asked. And can it be asked? Yes, a simple definition could be asked for 3 to 4 marks also. So it would be really easy marks, and you should not let go of these marks if you want to score really, really good marks in your AA syllabus and AAA syllabus. Okay, AAA syllabus. Now include possessing or in any way dealing with or concealing. Possessing, that is, even if you are not the owner of it, you are just in possession of it, then also it would be called as money laundering. In any way dealing with, that is, even if you are not in possession, even if you are not the owner, but you are just a broker facilitating the transaction, then also you will be considered a money launderer. Concealing, that is, you are nobody, you are not helping in dealing, you are not in the possession, you are not in the ownership, but you are just helping them conceal the origin, you are just a party to their process, then also you will be considered as a money launderer. The proceeds of any crime, okay, which is a criminal property. So my dear friends, if somebody has tried to sell off certain property illegally, okay, it was not in their possession, it was not in their ownership, they have illegally sold some property, and they have transferred the proceeds in such a way that they want to maintain the control over it, but they want to hide the true origin or ownership of it. Will this be called as money laundering? Yes, if they want to provide a legitimate cover over it. That is, if they want to hide it, then it might not be a money laundering. But if they do a legitimate cover over it, that is, if they call it as legitimate money, even not if theirs but somebody else's, but it is, if they provide the legitimate cover over it, then also it would be called as a money laundering transaction. Okay, so there are multiple stages of this money laundering transaction. There are multiple stages of it, but before that, let's also understand it also includes what? An attempt or conspiracy to commit such fraud. That is, even if you have not fully attempted or you have not completed the transaction, but you have tried to attempt for it, then also you will be called as a money launderer. Aiding, abetting, counseling or procuring the commission of such an offense. That is, even if you are not directly involved into the process, but still you are just facilitating the transaction, maybe just as a broker, maybe just as a handler, then also you will be called as a money launderer, and you will be booked under the charges of money laundering. Such a strict act, right? Yes, it is a very, very strict act, my dear friends. Now, an act which would constitute any of these offenses would be called as money launderer. Criminal property includes money, securities, and tangible and intangible property. Everything is covered, no? Money, securities. Even if you are dealing in shares, not money, then also you will be considered as a money launderer. Even if you are dealing in property, that is, you have transferred the property to hide some illegitimate cover or to provide legitimate cover to your illegitimate income, then also you will be called as a money launderer. It includes everything. Okay, this is also very important. That is why written in green color. Any queries here? Yes, any queries here? Any queries here? Any queries here? Up to here, any queries? Because this is really important. This definition is really, really important for you. So yes, any queries here? Please let me know. Okay, no queries. Thanks. Now, stages. When I talk about the stages of money laundering, so there are 3 stages of money laundering: placement, layering, and integration. Let's first understand from the help of an example, then we will go for the detailed study of it. Okay. My dear friends, if I have to generate some money laundering transaction, if I have to facilitate some money laundering transaction, you know how I would be doing it. I'm not doing a money laundering transaction, I'm just explaining. Okay, my dear friends, let's try to understand this. Okay, say I got one bag. Okay, I am very bad at drawing, but say this is one bag full of cash. Okay, this is one bag full of cash. Now when I say that this is one bag full of cash, I have to launder it and convert it into a legitimate, provide legitimate cover to it to convert it into a legitimate income. Okay, now you know what I'll be doing it. First of all, I would be receiving it, so Mr. A would be receiving it. Then I would be distributing it to multiple people in small denominations. Say I would be distributing it to B, C, D and E. Okay, then I would be creating one company, say A Limited. Okay, I would be asking all of these people to invest this money in A Limited, and then finally I would be getting it back as a legitimate income, because I'll be the owner of this A Limited, right? So this stage is called as placement. This stage is called as placement when the money first enters the financial system. This stage is called as layering, when it is divided into multiple layers, and when it is received back into the economy as a legitimate money, then it is called as integration. Very, very important, right? So let's read it now. Placement. Oops, we might have lost the example that we have written. Let's see, otherwise we'll have to write it again, don't worry. Yes, that is why I have started the auto saving mode, so that we do not lose out on anything. Okay, let's quickly write it again. Okay, before that let's save up to here. Now say there is one briefcase of cash A distributed to B, C, D, E, F. Okay, they all have invested into one company that I have created, A Limited, which is going to give this money back to Mr. A only. Now this stage is called as placement, this stage is called as layering, and this stage is called as integration. Okay, this is very, very important. Okay, now let me save it again. That is why I have kept the auto save also on. Okay, now let's read it. Okay, let's read it. Placement, layering and integration. When I talk about placement, first introduction into the financial system that we have understood. Layering, concealing the origin via series of complex financial transactions. Now I have given it to one set only. What if B would have given it to somebody else, C would have given it to somebody else? That is called as layering. Integration, reintroduction into the financial system in the form of clean money. I hope this is clear to you. Now let's discuss about FATF. Sir, we have already discussed about FATF, right? That was a very brief discussion. Now we are going to discuss about FATF in a little more detail for the purpose of money laundering. Okay, from the point of view of money laundering. Okay, yes, perfect. Now FATF, Financial Action Task Force, is there. Purpose is to develop and promote national and international policies to combat money laundering and terrorist financing that we have discussed. The recommendations include what? The scope of criminal offense of money laundering, that is what should be covered as part of the money laundering that is covered over here. Measures to be taken by financial institutions and non-financial businesses. For example, when you go to open an account, you will see that they ask for certain documents. Some of those documents are recommended or strictly applied or implemented by FATF only, that you will have to do KYC. We will be discussing about it in the same chapter. So you will have to do KYC, you will have to do CDD, all of that. Now transparency and beneficial ownership of legal and persons and arrangements. Transparency and beneficial ownership of legal persons and arrangements, as in whatever transactions are entered into, whatever proprietary benefits are there, whom to whom it should be transferred, to whom is the legal ownership transferred, that is also given by FATF. International cooperation, including mutual legal assistance and extradition. A lot of times some people use money laundering transaction for international purposes, that is they involve multiple nations so that they can complexify the laws and get done with it or get some benefits out of it. But this FATF helps multiple nations to extradite the people who have covered this or who have done this money laundering transaction. They help multiple countries with processes that would help them solve this money laundering issues. Now, need for ethical guidance. Is there any need for ethical guidance? Yes. See, anybody could get a chance to enter into a transaction of money laundering, but what will stop them is the ethical choice that they have, right? So ethical guidance is needed because the scope of money laundering offenses is wide. That is, a person who is at a very junior level at the corporation and the person who is at a very senior level, both might have the chances of entering into money laundering transaction. Failure to comply with detailed provision could have serious consequences, and that is why ethical guidance is very much important here, that if you do not follow with these guidances, if you enter into any money laundering transaction, there could be serious consequences on you. Professional judgment must be exercised to meet reporting requirements. That is, even if you have not reported any of the requirement which might be a suspicion of money laundering, that is also going to be very severe, be it for the auditors, be it for any of the reporter. Disclosure requirements may conflict with the fundamental principles of confidentiality. That is, sometimes auditor might feel that what if they report and they are booked for the breach of confidentiality. That could happen because they came into the information, they got to know about some information, and now they have to disclose it in such a way that they are not booked for breach of confidentiality. Also, confidentiality provisions are also taken care of, and they are not party to this fraud, and there is no tipping of charges also on them. Now, liability. So what is this tipping of charges that you have just spoken about? Let's just wait for a few minutes, we will get to that topic. Liability. What is the liability from the point of view of auditors? All partners in a practice and directors in a firm are potentially liable on a joint and several basis for breaches of the firm's obligation. That is, if firm was required to report something and they have not reported it, who can be booked? All partners could be booked in practice, and directors also could be booked and potentially liable on a joint and several basis. That is, they are jointly as well as severally liable. All individuals are liable for obligations related to their respective breaches. That is, if somebody specifically has conducted some breach and it is proven, then they would be liable on the individual basis. The firm might not be liable. Now, professional accountants will not be in breach of any professional duty of confidence if they report in good faith. That is, imagine a situation. Now, this is a very different situation that I am going to talk about. The management was about to remove the auditor. Okay, it is documented that management was thinking of removing the auditor. It was communicated to the auditor as well, and now the auditor has disclosed something just to protect their appointment of office of auditor. Now, is it in good faith? Maybe not. We'll have to look for the more evidences. But if I talk about that everything was going really well, auditor came to know about it, auditor reported it in good faith in the public interest, then auditor should be given immunity. So, professional accountants will not be in breach of any professional duty of confidence if they report in good faith any money laundering knowledge or suspicions to the appropriate authority with reasonable grounds for suspicion. That is, if they had reasonable grounds of suspicion, then they will not be booked for what? For professional duty of confidence, that is breach of confidentiality. Now, legal privilege. What is this legal privilege? You must have understood, or you must have countered attorney-client privilege term, right? What is attorney-client privilege? Whatever a client discloses to an attorney after they have hired them, that is something that is kept as a privileged information in the office of their lawyers, solicitors. They cannot be used. These informations cannot be used in a court of law. So, the right of an individual or entity to consult lawyers about their legal position and to have the privacy of those consultations respected. That is why it is said that you should not lie to a lawyer or an advocate, because once you go into their chamber, you have to accept everything, and that is a privileged information. Even if you accept, it is not admissible in a court of law. Lawyer cannot come forward and say that this person has committed this because they admitted it to me, because that is privileged by attorney-client privilege. Now, legal privilege does not apply to discussions between professional accountants and their clients. That is, legal privilege is there, but it is between attorney-client privilege. It is not between the professional accountant, the auditor and the client. Accountants must report all suspicions of money laundering. So, say if the MD of the company comes to you, the CEO of the company comes to you and admits that they have committed a money laundering, and you are thinking that, you know, my dear friends, if I report, it is going to be an issue because it is going to be privileged information. No, it is not. It is not a privileged information. It is not covered as a privileged information. Will I be booked under breach of confidentiality? That depends on how you report, in good faith, in bad faith, what is the evidences available. Okay. Now, so you should ideally take a legal advice every time. Now, money laundering reporting officer, MLRO. Money laundering reporting officer, MLRO. Who is this? Who is this MLRO? So this is appointed by firms to counter and to look for these transactions, to be aware about where there could be money laundering and to make the firm aware and take the relevant steps also. Now the MLRO should have a suitable level of seniority and experience, because if they will not be a senior person, if they will not have the relevant experience, people might not consider their guidances seriously, right? Now the MLRO is responsible for considering internal reports of money laundering. That is, if any report has been made, it is in the firm, it is in the company also. If any report has been made for money laundering, MLRO is the person to whom this report will go. They will investigate, they will find out whether this report holds true or not. If yes, they will take the relevant actions. Deciding if there are sufficient grounds for suspicions. Preparing SAR. What is SAR? Suspicion activity report. Suspicious activity report. That is how the communication received, how the communication was received, how the investigation was done, what is the evidences, what are the evidences that have been obtained, and what is the final conclusion and why. Liaising with the authorities on consent and disclosure issues. That is, if somebody wants to disclose something to the authorities, the overall liaison that happens, that is overall procedure that is followed, MLRO facilitates that procedure. Now the MLRO may also take responsibility for, MLRO may take, is not responsible for, may take responsibility for training the firm's employees in AML. AML as in anti-money laundering, and SAR, suspicious activity report, how the report needs to be done, and what are the anti-money laundering provisions that have been created by the firms or the companies. Advising how to guard against risk of tipping off or prejudicing an investigation. That is, if any accountant wants to go and tip off the client that there is going to be an investigation, even if it was known casually, how they need to take care of that information. Should they report it to their client, not report it to their client, why, what would be considered as breach of confidentiality, all of that. The design and implementation of internal AML systems and procedure. That is how the anti-money laundering provisions are created within the company or the firm and how they need to be followed. My dear friends, this is one important, I'll save it first and then I'll say that this is one important topic that you should remember ideally. Okay, I would say please remember this, not just understand it, please remember this, because this is also one of the questions that could be asked from money laundering chapter. Okay, I hope this is clear. Now let's move forward to record keeping. When I talk about record keeping, see, this is generally required by financial institutions, because financial institutions are the ones who are used for the purpose of this money laundering transactions. For example, if I have to launder the money and if I have to get it layered, I might not be getting it layered in cash, I might be getting it layered through multiple bank accounts, and there are certain bank accounts which are non-traceable also sometimes, right? So it is very much important that records are kept up to date from the transaction date, from the date of the account opening, from the date of the closure of the account also. Because see, let me give you an example. What would happen if the investigation is going on, some transaction has happened on say 1st January 2026, okay? The account got closed on 1st January 2026 itself, okay? It was highlighted on say 31st March 2026, that is after 3 months. The investigation started, people went to the financial institution, they asked that who held this account, and they said that, you know, so after 1 month we generally trashed the documents, now we are not aware who was the owner of this account. Now that is not acceptable, because there are certain laws which are created for the record keeping and you will have to follow those laws. Now what are those laws? All client identification, details of all business relationships and transactions, and details of monitoring of the relationship must be maintained. What? Client identification documents, that is KYC. Details of all business relationships, that is investments and all. Transactions also, whatever business transactions has happened, you'll have to keep a record of it. Must be for the transaction, it must be kept in a readily retrieval form. Readily retrieval as in which could be retrieved anytime, for a period of at least 5 years following the completion of the last transaction or at the end of the business relationship with that client. That is from the end of the transaction or from the date of the end of the relationship with that client, that is the account closure in our example. After that, at least for 5 years, whichever is later. Client verification records, like the KYC records, that should be kept minimum throughout the period of the relationship as well as for 5 years after termination of the relationship. The timeline is similar, right? At least 5 years, at least for 5 years, so you don't need to worry about it, the timeline is similar. Okay, now must be from which date 5 years, that you will have to remember. Must be kept for at least 5 years. What? All internal external reports and actions, that is if there was any report, any highlights. You know, few days back I was trying to enter into an international transaction. What has happened is that in that transaction my bank called me up and spoke to me about whether I am actually doing that transaction, because it was a little unusual transaction. Okay, Now my dear friends, they will keep a record of this transaction for at least 5 years, at least 5 years from the date of being dealt with by the MLRO. If they would have contacted their MLRO, then they will have to keep that transaction records at least for 5 years, because this is important for them that they contacted me. They'll have to prove that they contacted me, I approved the transaction, only then it has happened. Now customer due diligence. Customer due diligence as in who is opening the account. I'm taking the example of an account only, right? Who is opening the account, who is doing the transaction. Now taking steps to identify customers and check who they say they are. That is, if I say that I am CA Supreet Agrawal, of course they will not be checking CA in my Aadhaar card, PAN card or the national records, but Supreet Agrawal should be there, right? CA is some qualification, some designation, some suffix that I have generated, that I have earned after a qualification, so that might not be reflecting on my national records, but Supreet Agrawal should match, right? And that is why all of my accounts would be opened by the name of Supreet Agrawal only and not CA Supreet Agrawal. Also known as know your customer, KYC, right? Must be conducted when important, when it should be conducted. Following the similar lines, I would be mentioning this also, very very important, 5-star. Please remember. So is it important to remember? Very very important to remember, my dear friends. Now when it should be conducted, when it should be conducted, simply at the time of entering into the relationship, every time there is any unusual relationship, right? So when establishing a business relationship, when carrying out occasional transaction, in this case that bank asked me for my details, re-verified the transaction just because it was a little unusual transaction for them. When there is a suspicion, if they suspect something, that they will be asking questions. When there are doubts concerning the accuracy and reliability of previously identified information, that is, if they feel that I reported some of my address and they have sent their executive twice or thrice, but I was not found on that address, they might be re-verifying, they might be asking me to update my records, because now they seem to believe that some details might have changed. Now suspicion. What is suspicion, sir? What is suspicion? Suspicion as in doubting, right? Yes, this is that only. Recognition, reporting. Recognition and reporting as in one which is inconsistent with the client's known legitimate business or personal activities. That is how you will recognize that there is a requirement of doing the suspicion. Reporting. Professional accountants are legally required to report suspicions to the appropriate authority. It could be MLRO, relevant MLRO. It could be the relevant authority. Examples. There could be some examples where you have to recognize that there should be a suspicion. Unusually large cash deposits. Some time back I deposited, because of some reason I deposited some amount of cash into my bank account. Okay, immediately I received a call from my bank manager and the relationship manager. They said that, sir, your account has been credited with some of the cash deposits. Did you do it? If yes, please confirm your PAN number, please confirm your these details. They reconfirm the details and then they were okay with it. Frequency conversion of currencies, that is how many times the currencies are being converted. Counterparty is not known, that is the other party is not known about the transaction. They have highlighted that I should not have entered into this transaction. Say if I receive some money from some place and I was not expecting that money, I might raise an issue that why this money has been credited to my account, right? But so if it is credited, enjoy it. No, it should not happen like that. Money laundering transaction could be there. Any activity inconsistent with normal business activity, say in my case, tuition fees received is a normal transaction, nobody would highlight it. But if I receive a big amount from somebody who is, say, at a foreign country, then they might highlight it. Offshore business arrangements without clear business purpose. Now reporting. In my case, if I receive a money from UK, will they accept it? Yes. If I receive a money from, say, UAE, will they accept it? Yes. Why? Because this is a normal transaction in case of an ACCA trainer, that the students are settled in UK as well, the students are settled in UAE as well. Now reporting. Professional accountants are legally required to report suspicions to the appropriate authority. It is a criminal offense not to do so. That's serious if you don't report it. But sir, if we report it and they book us for breach of confidentiality, that is why you should take a legal advice. Okay. Now, education and training. Now we are heading towards the end of the chapter. Education and training, how you should educate. So relevant individuals must be provided with training. Relevant individuals as in, say in this case, in the case of bank, the cashier, the person who is doing the accounting, the people who are involved into the finance team, they should be aware about what are certain red flags, certain highlight points, certain identifiers, certain indicators of money laundering. So relevant individuals must be provided with training on how to report to MLRO, how to identify clients, how to recognize and deal with situations that, sir, this how to identify clients is not for the money laundering, that is for the purpose of suspicion, right? How to recognize and deal with situations that may involve money laundering, the main money laundering, the main laundering offenses, the businesses procedures to prevent money laundering. Now, methods of training could be conferences, seminars, courses. Do you need to remember this? No, you can write it in your own words. There could be computer based training courses and webinars also. In fact, when I was working with one of the big fours, they trained me on money laundering also. There were certain courses that were required for us as interns, as assistant managers to attend, to watch, and then at the end of it there were assessments also to evaluate whether we have understood our reporting responsibilities or not. Then other reporting duties other than reporting suspicions, there could be reporting to regulators that might be required. Sometimes auditors report on financial statements, that is sometimes auditors might be required to report it in their financial statements also. There are separate guidances for that. Reports to those type of governance, we follow it under ISA 260 and 265 also. Sometimes statements of circumstances on resignation as an auditor, sometimes you might be required to mention this. If this is the reason why you do not want to continue the audit, you might have to report it under a statement of circumstances as well, that you file at the time of resignation. Reports on director's conduct also. Now, basic elements of AML program, and after this chapter would get completed. Basic elements of AML program. So do we need to remember this word by word? Definitely not. Do we need to understand it? Yes. So there should be dedicated resources, like MLRO is a dedicated resource to handle these transactions. Written policies and procedures should be there. That is, it should not happen that MLRO is taking the decision based on their judgment every time. Comprehensive coverage, that is CDD and KYC. What is CDD? Customer due diligence. What is KYC? Know your client or know your customer. Timely escalation and resolution of matters, that is MLRO should not do this, that or the anti-money laundering programs should clearly identify when a matter would be highlighted, when a matter would be given to seniors as well. Explicit management support should be there, that is management should also support. MLRO should not be given the whole responsibility. What they should be given the responsibility is that they should be dealing at their level. Once it goes beyond their level, management should also support them to perform their job. It should be looked upon as an important part of the whole process. Sufficient training and education should be provided to the relevant people, and regular review and audit of the program should be done. These are very basic points, but very, very important for you, because these are from AML, which is anti-money laundering policies. I hope you have understood it. Just in case if you have any doubts, please feel free to let me know in the chat box. Yes. Now we will be taking a 5 minutes break. Don't worry about it. Yes. Yes. Now we will be taking a 5 minutes break. Don't worry about it. We have completed approximately 37 pages. That's really, really good. Approximately in 50 minutes. Amazing. Yes. If we remove that 10 pages that we have not covered, because that would be covered in AA, then also we have covered approximately 27 pages in 50 minutes. That's 2 minutes per page. That's a really good speed that we are following. Yes, my dear friends, any questions, any discussion points here? Any questions, any discussion points here? No? Great. So let's take a 5 minutes break, then we can go for chapter number 3, which is professional ethics and ACCA's code of ethics and conduct. And this is going to be one of the most important chapters, because this chapter is also asked at least for 8 to 10 marks in your examination. You will definitely see a question. Generally this question could be asked in question number 1, that is section A questions as well. Okay, so let's take a 5 minutes break, then we will move forward for this particular chapter. Thank you. Yes, my dear friends, please let me know if you are back. I can read your chats now. Please let me know if you are back. Now we will be covering chapter number 3, which is going to be completed approximately in 40 minutes, 30 to 40 minutes. Yes, are you all back? Please confirm me on the chat box. Yes. Okay, so now my dear friends, let's go for chapter number 3. This chapter number 3 is going to be very important because it is generally asked for 8 to 10 marks of your AAA examination, at least 8 to 10 marks, because there is definitely a question on ethics. Okay, even if there's not a direct question, there's always a question which is related with either say risk or the completion stage or the reporting stage, and any between planning acceptance. Now let's talk about chapter number 3, professional ethics and ACC's code of ethics and conduct. Compliance with the code. Compliance with the code. This is talking about the code of ethics, right? Compliance with the code. ACC's code of ethics and conduct is based on ISBA's international code of ethics. So there are different codes that are there. One is ISBA's international code of ethics for professional accountants, and based on that ACCA has also created one code of ethics and conduct. All students, this chapter is something that you need to understand line by line. Okay, I have highlighted all the key pointers, so just follow along and you will be gaining complete insight into this chapter. You will be understanding this chapter in full. All students and members must very important for them, mandatory for them, observe proper standards of professional conduct and refrain from misconduct. But sir, all students and members, this is where people make mistake. All students as well as members, that is not just members, students, affiliates, members, all three. An ACCA student, affiliate or member who fails to comply with these standards will be liable to disciplinary action. Who will be taking the disciplinary action? The disciplinary committee of the ACCA body. Now fundamental principles, let's talk about fundamental principles. So fundamental principles are 5: integrity, objectivity, confidentiality, professional competence and due care, and professional behavior. Okay, when I talk about integrity, let me explain this first in 2 to 3 minutes, and then we will be going and reading. Integrity means honesty as well as straightforwardness. Just honesty is not appropriate, just straightforwardness is not appropriate. Honesty along with straightforwardness, that is you are truthful in whatever you are saying and you are explaining it in a manner that will only convey the point that you want to convey. You are not playing with words. Integrity. Okay, then objectivity as in being unbiased, free from undue influences. Then third thing is confidentiality, that is whatever information you are gaining as part of your professional assignment, you are not using it for your personal interest. Okay, so professional interest would always come above the personal interest. Professional competence and due care, that is you are continuously updating your knowledge, skills and experience, and you are using that knowledge, skills and experience to take best judgments. Then professional behavior, that is whatever judgments you are taking it professionally, and you are not being involved into anything which will discredit the or bring disrepute to the profession. Okay, so fundamental principles. Number 1 is integrity. Straightforwardness and honesty should not knowingly be associated with reports or information which they believe contains materially false or misleading statements, contains statements or information provided recklessly, or omits or obscures required information. That is wherever there is false information, you should not be associated with that report. Even if that false information is omitted, then also, and you are aware about it, then also you should not be part of that report. But it speaks about knowingly. Okay, knowingly you should not enter. Now objectivity. Professional judgments must not be compromised by bias, conflict of interest, or undue influence. That is, you should be free from undue influences and you should be unbiased in your approach. Now confidentiality means what? That not disclose confidential information acquired as a result of professional and business relationship unless there is a legal professional right or duty to disclose so. My dear friends, if I was auditing some company which is a public interest entity, publicly listed company, and I got to know certain information which makes me believe that the share prices might go down, should I tell my relatives not to invest in that company? No, because this is professional information bound by confidentiality. Professional competence and due care. When I talk about professional competence and due care, attain and maintain level of knowledge, skill to ensure their competence, that is they should continuously update their knowledge, skills and experience, and act diligently in accordance with applicable technical and professional standards. Professional behavior, comply with relevant laws and regulations, behave in a manner consistent with professional responsibility, and avoid any conduct that might discredit the profession. This is something that we have already discussed in our explanation also. There is nothing new that has been mentioned over here. So do we need to remember this exactly word by word? No. But my dear friends, all of this together creates the independence, right? This fundamental principles of ethics creates independence. So if I have to define what is independence, if some professional accountant is abiding by these fundamental principles, then I can say that they are independent. Independence of mind as well as independence of appearance, both are important. That is, you should not look to enter, or you should not be looked upon into entering into any transaction that might disturb your independence, that might reduce your independence. That is true, but you should not also play with the legal attributes and arrange something that makes you less independent. Even if there is independence of appearance, there should also be independence of mind. My dear friends, let's come to this topic here, which is threats. What is this threat? See, whenever we talk about independence, there are always threats. Whenever we talk about positives, there are always negatives also out of it, right? So let's discuss about what is the concept of this threat, and then we will be going to discuss about it. My dear friends, if I talk about that, integrity is there, objectivity is there, confidentiality is there, professional competence and due care is there, and professional behavior is there, this will create, or this will help the auditor to become independent. There are certain things that might reduce the independence of the auditor. That is also true, right? There might be certain things which might reduce the independence of the auditor. So now what you need to understand here is that there are threats that are very, very important. So number one threat is the self-interest threat. That is, if auditor's personal interest and their professional interests are not aligning or are conflicting in nature, then they will have some reason to become less independent, right? So we'll have to reduce that threat by applying the safeguards. Safeguards are just the solutions of it, the possible solutions of it, right? So threat are divided into 5 parts, and then we have to discuss about all of those threats. We have to discuss about when this threat could come up and how do we resolve it. That is the safeguards. Okay, that is how we have to study. So when I talk about the threat, number one threat is self-interest threat. Then there is self-review threat. That is the work that has been done by the auditor might be reviewed by them only. So naturally they will not be able to find, or they might not be willing to find the mistakes in their own work. Even if they find, they might not be willing to report it. Then there is familiarity threat. If the client company and the auditor company or the professional accountants company have been in close relationship, either personally or professionally, for many years, then it might be very difficult for the auditor to become objective, to become independent in their approach, right? Then there could be intimidation. Intimidation as in what? Intimidation as in there could be some unnecessary pressure that might be created, be it on the timeline, be it on the cost, be it from the position of power. The client might be able to influence the judgment of the auditor. They might say that, we are not going to hire you from next year if you do not do this in this way. So that is intimidation. And finally we come to the advocacy threat. If the auditor is also representing the client in a court of law, say in a representation services which should be done by the advocates, if say in front of any company law tribunals, the auditor is representing the client, and if they are aware that if we lose this case, we might also lose our audit assignment, so they might be promoting the ideas of the client, they might be representing the client, they might be assuming the management's responsibility. So this is called as advocacy threat. So these are 5 threats: self-interest threat, self-review threat, familiarity threat, advocacy threat, and intimidation threat. These are the threats that we need to understand. After this we will be understanding when this threat happens, when this threat arises, and then after that we will be discussing about how to safeguard against these threats. So now we can read it. Self-interest threat. Okay, see, if you do not understand it, then only read it, you might feel that we are just reading, but if you understand it correctly, then we read it, you might be able to grasp it better. So self-interest threat, we have already discussed about it, may occur due to financial or other interest. Say I have invested in the shares of the company of the audit client. Now undue dependence for fees on one client, that could be one example of self-interest threat. Say my 50 or 60% of the fees is coming from one client. If that client gets angry, if that client lets me go, then I'll lose 50 to 60% of my firm's revenue. Loans guarantees made to or from client, that is, I have taken a card from the bank and the bank is my client only, so I might lose on the special benefits. Audit team negotiating employment, there could be certain scenarios where the client has given the offer to one of the members or some of the members of the audit team. They are negotiating their employment, and that's why they do not want to report anything adverse. Financial interest in a client, that is, I have invested in the company. Gifts and hospitality, that is, they provide damn good gifts, they provide really good gifts, they really provide us all the facilities that are not generally provided to the auditors, and we do not want to lose them. Now self-review threat could be there. Self-review threat could be there. Self-review threat could be there. May arise when a professional accountant does not appropriately evaluate the results of a previous judgment made by either themselves or another individual within the firm. That is, if I am working in, say, audit department, and some of the work has been done by, say, direct tax team of my firm only, because it is a separate team, they have done it, or there is a separate firm which comes under the same network, they have done the work, and now I have been given the responsibility to evaluate the conclusion of that particular work as an auditor. I might not be willing to report any discrepancies because my firm would be on the losing end. So that could be one example. Reporting on operation of system which they have designed or implemented, that is some firm, some department of my firm, some of my network firm, they have designed the internal control procedure. Now I am about to report on them. Audit team member has been employed with the client in role that influenced FS, reviewing decisions or judgments made by themselves. Now advocacy thread. What is advocacy thread, sir? See, now I am going to save everything. Advocacy thread. What is advocacy thread, sir? Advocacy thread when the client is when the auditor or the professional accountant is representing. So may occur when a professional accountant promotes a client's or employer's position or opinion to the point that subsequently objectivity may be compromised. That is, the client has been accused of some criminal case. This firm having one department of the criminal activity, they are representing, and now they are promoting the favorism of this client to the level that now their objectivity is compromised. That is, if they report anything adverse on their audit report, the court of law might also think that on one end they are presenting that they are the most wonderful company, and at another end they are also highlighting the discrepancies. So that is promotion of ideas. Promoting shares in an audit client, acting as an advocate on behalf of audit client, commenting publicly on future events. What if you go on some public event which is for say accountants or say for future accountants, and now you are saying that this company is the best green energy company in the country. Now my dear friends, this is promoting the company's ideas. Familiarity threat may occur when a professional accountant becomes too sympathetic to the interest of a client because of a long or close relationship. What if some kind of embezzlement has been highlighted, and since the audit partner was aware of the finance director's activities since long, because they have been really good friends, and now this embezzlement has come down, they might feel that this person has never done it in last 20 years, this is the first year they have done it, let me give the warning and not report it. That could happen, right? So over familiarity with the management gives or preferential treatment unless the value is insignificant. See, one of my clients gifted me one keychain with the logo of the company. Now this is a very trivial gift, this is a very insignificant gift. In fact, I was thinking that why such a really well earning person, well paid person is gifting me this much amount. But then my seniors informed me, I was an intern back then, my seniors informed me that they have gifted you this much amount because it becomes trivial for you and you can accept it. Okay, now a former partner of the audit firm becoming a director, officer or employee of a client in a position which influences FS. This might also be familiarity threat. Intimidation threat. What is this intimidation threat? I have told you about that, undue pressures, right? So may occur when a professional accountant may be deterred from acting objectively by actual or perceived pressures. So the threat of dismissal or replacement in the following years or in this year only. Being threatened with litigation, that is, if you report this, we are going to sue you in a court of law. Being pressured to reduce necessary work to reduce cost or fees, that is, if you reduce the work, we will reduce your fees as well, or if you do more work, we will not be paying you. That could be there. Now addressing threats, but here I would like to specifically mention about what all points we have to discuss after this. Addressing threats as in safeguards. Okay, so when I go here, we have to discuss about independence after this, we have to discuss about fees related discussion after this, then we have to discuss about public interest entities, then we have to discuss about inducements, gifts, that is important, and after that we have to discuss about actual or threatened litigations, and finally we have to discuss about the financial interest also. After that, family and other personal relationship, that is something that we have understood as an example, but now we will be understanding everything about loans and guarantees, provision of non-assurance services also, and then we will be discussing about the internal audit also, whether we can provide it or not. All of this we will be discussing in detail. Then long association of senior personnel, we can discuss about the cooling period over here, and finally we will be going for employment with an audit client, close business relationship, recent services, serving as a director, and that's how we will be moving towards the end of the chapter, and we will be discussing about breach of independence provisions. And after this, second opinion, that is one of the last few topics, confidentiality, then conflict of interest. And with this, if I talk about conflict of interest, then responding to nuclear, and finally this chapter would be completed. So these are the topics that we are going to discuss. So that is why I have explained all of those pointers in a little short over here, because we are anyways going to cover it in this part. Okay, so it is roughly going to take 25 to 30 minutes more for us. Okay, like we discussed that the total chapter would be getting completed somewhere in 30 to 40 minutes. We have just invested 15 minutes into the chapter. In next 20-25 minutes we will be covering the whole chapter. Okay, so let's discuss from here. and that is why you don't need to worry. That is why I have shown you that what we are going to discuss. Okay, so don't think that we are going to let go of any concept. We are going to discuss everything in full. Just stay with me till the end. Any questions so far? Any questions so far? Any questions so far? Yes, any questions so far? I can read your chats now. Any questions so far? No. Okay, now let's discuss about safeguards. So action taken by professional accountants that effectively eliminate or reduce the threat to an acceptable level. For example, assigning additional time of qualified personnel, having an appropriate reviewer also sometimes. For example, if I have received certain gifts, now the firm is of the opinion that I might not be independent in my approach, so they can get my work reviewed. The work that I have done, they can get it reviewed from an independent personnel as well. Independence of mind as well as appearance. We have discussed both. Independence of mind as in I am actually independent, independent of appearance as in I have not done any activity, not entered into any transaction which might reduce my independence. So independence of mind means what? A state of mind that permits the expression of a conclusion without any undue influences. That is, I am in the state of mind where whatever I say that might not be or that should not be able to be countered by anybody, that I have not given it with independence. Independence in appearance means avoiding instances in which it can be reasonably concluded that an author's integrity has been compromised. Now fees. Now we are going to discuss about specific cases. What about the fees? So fees might create a self-interest or intimidation threat. How? Because if there is undue dependence on one client for the entire fees or majority of the fees of the client of the firm, then it is going to be very, very important issue. Safeguard. What could be the safeguard? Have an appropriate reviewer who does not take part in the audit engagement assess the reasonableness of the fees proposed. That is, if the fees is of that level that creates major dependence on one client, you could have, this is one safeguard. These are the suggestions. It's not important that you have to do this only. If there is any other way of applying the safeguards, that could also be acceptable. Now contingent fees, calculated on predetermined basis based on outcome. This is not allowed generally. That is, if you have said that if you identify 10 errors in the financial statements, your fees would be say 1 lakh. If you identify say 20 errors, your fees would be 20 lakhs. So $10,000 for each error, that should not be there. A firm must not charge a contingent fees directly or indirectly for the audit services. Okay. Now also prohibited for non-assurance services to clients if fee is material to the firm and the outcome of NAS, that is the non-assurance services, depends on a judgment related to audit of the items. Say if the dispute is going on regarding say taxation services and the taxation amount that has been determined by the auditor has been finalized for the purpose of final calculation, then also you should not take the contingent fees. Otherwise it would be said that both the firms who were part of the same network, they might have merged to report such a number. Now, the level of self-interest threat might be increased when a large proportion of fees is generated from non-audit services to an audit client. That is, it's not important that your fees from this client is important. Sometimes it might happen that you provide so many non-assurance services to this client, that is maybe the consultancy, maybe some taxation services, tax preparation services. You provide so many services that your audit fees, the ratio of your non-assurance services and audit fees is very high, and there might be safeguards that might be required. Here also you can have an appropriate review or reduce the extent of other services. The level of self-interest threat might be increased if fees payable by an audit client are overdue during the period. That is, if previous year's audit fee, which is a normal course, that previous year's audit fee might be paid in the current year after the audit is conducted. Now if that fees is undue, or undue as in if that fees is outstanding, sorry, not undue, if that fees is outstanding, that is if that fees has been outstanding or overdue for many time, for many months, now you might be feeling undue pressure that if I report adversely on this client, I might not be able to recover my previous year fees as well. The appropriate safeguard is have an appropriate reviewer or obtain partial or full payment of fees before auditor's report is issued, so that you can say that I have issued this report without any undue pressures. The level of self-interest and intimidation threat might be increased if total fees by an audit client represents a large portion of a firm's total fees. The percentages are also defined. For PI 15%, for non-PI 30%. Now public interest entities. What are public interest entities? These are listed entities or an entity defined by regulation as PI or required by regulation or legislation to be audited with the same independence requirement that apply to listed entities. That is, a listed entity or whatever has been mentioned as PI, or there could be some companies which might be requiring same level of independence for the purpose of audit as other companies of PI required, so that would also be considered as PI for the purpose of this provision. So when can some company be called as PI? Say insurance companies are always public interest companies. Say banking companies might always be called as public interest entities, whatever their turnover may be, right? Whether they are listed or not. When for 2 consecutive years. Now this is important. When for 2 consecutive years the total fees from a PI represent more than 15%. We have discussed, no, 15% for PI, 30% for non-PI of firm's total fees. The firm must determine if a pre-issuance review is required on second year's opinion. That is, if 2 years the fees is more than 50% of the firm's total fees, you have to evaluate pre-issuance review. If it continues for 5 consecutive years, the firm must cease to be the auditor after opinion for the 5th year is issued, unless it is in the public interest to continue, but they have to get the review done for every year after 5th year. Not PI. If for 5 consecutive years the total fees from a non-PI goes for more than 30% of the firm's total fees, then prior to issuing 5th year's opinion, a professional accountant, not a member of the firm, reviews that year's audit work, and after the opinion for 5th year is issued, before 6th year opinion, a professional accountant reviews 5th year's audit work and later years also. The firm should communicate in a timely manner with those charged with governance of a PI audit client, fees for audit of FS, and whether the threats are at an acceptable level. If not, action should be taken. Now this is very, very important. Okay, 15%, 30% should be determined, and actions, relevant action should be taken on a timely manner. Now let's discuss about inducements, including gifts and hospitality. What gifts should be acceptable, what gifts should not be acceptable. The keyword here is trivial. If any of the gifts, any of the hospitality that has been offered is on a humanitarian ground, that is, if you went to a different city or a different location for a client and they have just offered you a basic, not a very luxurious one, based on the requirements, they have offered you a decent stay, accommodation, food, right? That is humanitarian ground, that would be considered as trivial. Or if they have gifted you something, it is very, very trivial. Say in my case, skiing, right? Might create a self-interest, familiarity or intimidation threat. A firm or audit team member. Why familiarities are here? Because the gifts might be given on a familiarity basis. They were not required to do so, but they did it because there was a familiar relation. So might create a self-interest, familiarity or intimidation threat. A firm or audit team member must not accept gifts, hospitality from an audit unless the value is trivial and inconsequential. Must not accept gifts and hospitality unless the value of the gifts is trivial or inconsequential, that is, it is not going to impact. A firm must have a policy to determine monetary limit, customary frequency, timing and recording. That is, first of all, monetary limit should be discussed. What is the monetary limit? Customary, that is, for example, some company might have a tradition that whenever you go to their place, they might be offering you a keyring, maybe water bottle, a very special water bottle, that could be the frequency, how frequently you can accept it. Timing, when it is given. If it is given just before the issuance of the audit report or at the time of finalization, you should not accept it maybe. And recording, you should report everything to the firm that we have received this gift, be it trivial, be it non-trivial. Any gift that is intended to influence behavior improperly should not be accepted even if the value is trivial or inconsequential. That is, whatever they are offering, even if the value is inconsequential, but if it is impacted or if it might have impact over your acting as an auditor, your auditor's responsibilities, then you should not accept it. Safeguards, informing partners or TCWG about the offer and amending or terminating business relationship. Now, actual or threatened litigation, let's discuss about this. Actual or threatened litigation. So, might create self-interest or intimidation threat. Issue or threat of a writ as in legal case. Writ as in what? Legal case. Writ as in what? Legal case. Okay. Now, the auditor may be unable to report impartially here, because they are so concerned now that even if one word goes wrong, they might be suing us. The significance will depend on the materiality of the litigation. Safeguards, independent review of the work subject to litigation and removal of team member from the audit team also, that could be some safeguards here. Now, financial interest. This is one of the most important parts that is asked. See, I'll tell you, although everything is important, but gifts is generally asked in the examination. Okay. Then financial interests are also generally asked in the examination. That is very, very important. Now, public interest entities, that is again one very important topic that you should remember. Okay, that you should remember. This public interest entity is also very important topic that you should remember. I hope this is clear. Now let's go to the discussion of financial interest. Okay, very important for your examination. Might create a self-interest threat. Threat depends on whether the interest is held by a partner, an employee or an immediate or close family member. Let's discuss it very carefully. A partner, even if not involved in audit, that is the partner of the firm. Even if one of my partners who is partner of my firm, they hold the shares over there, but they are very, very powerful position. They are in a very powerful position at this firm. Still, it would be considered as an issue and they'll have to sell it off. An employee, any employee of the firm. An immediate or close family members of what? Parent, child, sibling. That is, who is covered in close family member? Parent, child or sibling. If this is what? This is of the audit team members as well. Okay. Hope this is clear. Now, an interest in an audit client cannot be held by. Interest in an audit client cannot be held by an audit team member or any partner in the office, any partner and their immediate family members, spouse, partner or dependent. If unintentionally disposed immediately, that is, you will have to sell it off if you have acquired without any notice, without information. May hold as an exception if received as an employment right and the firm addresses it when necessary and disposes of the right to dispose arises. Sometimes what happens is, you might be, say I am auditing Google and my spouse has received some of the employment benefits like the ESOPs of Google. Okay, now she does not have the right, she does not has the right now to sell these off. Okay, so she'll not leave the job for my audit assignment, right? So what they'll have to do, I'll have to report it, and once there's a right that has been vested to her that she can sell it, she'll have to sell it off. Okay, that is very important. Now, family and other personal relationship may create self-interest, familiarity or intimidation threats also. The more senior the individuals involved, the greater the threat is there. Okay, that is, if say finance director is the best friend of the audit partner, it would be more important, more significant. What if the finance executive is the friend of say intern? Then it is less consequential. Safeguards: remove the audit team member and restructure responsibilities of the audit team. Loans and guarantees. What about loans and guarantees? Can the firm take loan from their audit client? Let's see. May create self-interest threat to an audit client is prohibited. Loan and guarantee to an audit client is prohibited. Prohibited as in not at all allowed in no cases, unless immaterial to both the firm and the client. Say firm's revenue is 1 crore, okay, in dollars, $100,000 or $10,000 or a lot of money is there, right? And if they have given say 0.1% of their amount to the loan to the client, and that is also very inconsequential, very insignificant for the client as well, based on their turnover and profits. So that would be allowed. From an audit client that is not bank is also prohibited. See, you can take a loan from the bank on, if the bank is your client, even if that you can take a loan on a friendly terms basis, or not on a very favorism benefits, but you can take it at arm's length basis, right? Because you have a relationship with them. If a client is a bank, acceptable if made under routine lending procedure, that is, no special benefits, no special interest rates have been given to you. And if it is not bank, then it is prohibited. Okay, very important lines over here. This is also very important. You cannot make up your answers here. Now, very important, non-assurance services. What are non-assurance services, sir? What are non-assurance services? What are non-assurance services? Non-assurance services are the services that have been provided by the professional accountant or their firm other than the audit and assurance services. So same jurisdictions, some jurisdictions prohibit auditors from providing non-audit services to listed company clients. That is, some jurisdictions, some countries say that if you are auditing any of the listed company or any of the pie company as well, then what you will have to do is you cannot provide any of the non-audit services, non-assurance services to them. Under corporate governance codes, audit committee must specifically approve non-audit services provided by auditors, and this is something that is studied under corporate governance framework as well when we discuss about audit committee. That is, what you have to understand here is, whenever you go for the discussion of non-assurance, non-audit services, it has to be approved by audit committee in the case of a listed or pie company. Before accepting an engagement to provide a non-audit services to an audit client, the firm must establish if providing the service would create a threat to independence. Prohibition on assuming management responsibility. That is, whatever non-assurance services you accept, you have to specifically agree, you have to specifically take care of the fact that it should not end up in you as an auditor or as an audit firm assuming any of the management responsibility. For example, what if they want to delegate the payroll processing, okay, the monthly payroll processing? Now this is the job of the management. If they're delegating to you on a regular basis, that should not be acceptable. What if they want you to take care of their taxes? Okay, so whatever taxes are there on a monthly basis, you will have to file it. Okay, now we have to assume whether it is management responsibility or not. So a firm must not assume management responsibility for an audit client. It includes controlling, directing, making decisions regarding acquiring, using or controlling of an entity's resources. For example, if they have been given the responsibility of managing the finances in investments as well as the cash flow, now that is a regular decision making process which should be done by the management, so I cannot accept it. Providing advice and recommendations to assist in management discharging his responsibilities, not assuming management responsibility. For example, if I end up in a role, they are offering me a role that you just guide, okay, you do not take any decision, you just guide a team, then it is acceptable, otherwise it might not be acceptable. I hope this is clear. Any questions? I can read your chats, please let me know. Yes, I can read your chats, please let me know if this is clear. Yes, please let me know if this is clear. Perfect, perfect. Okay, now accounting and bookkeeping services. So such services must not be provided to a PI audit client. You cannot take, otherwise that would be self-review threat only, right? You are preparing the financial statements, you are only auditing it. Such services can be provided to a non-PI if services are of routine mechanical nature and all unacceptable threats have been addressed. That is, you might be doing their accounting, but you might not be preparing the financial statements for the purpose of audit. Now valuation services, PI, non-PI. For PI, evaluation might create a self-interest threat, cannot be provided. For non-PI, evaluation involves a significant degree of subjectivity, then you will have to stop providing it. Okay. Tax services, very important, as in the examination also. Tax return preparation, very important thing, but very minimal also. It might not have the judgments, it might just be reporting. So do not create threat as past data is used and subject to review by the tax authority also. Whereas if I talk about preparing tax calculation, so it is prohibited for PI and appropriate safeguards for non-PI. What could be appropriate safeguards? Appropriate reviews could be there. The team could be different. Now tax advisory and tax planning services. Now this is important, tax advisory and tax planning services. Now here what you are doing is you are planning the taxes for the client, you are planning their investments also sometimes. So services that might create a self-review threat for a PI are prohibited. Okay, if involves valuation, the provisions of the code for valuation services may apply. Sometimes tax valuations might also be there, right? You might have discussed it under IAS 12 also. Now providing assistance in the resolution of tax disputes might create a self-review or advocacy threat. A firm must not assist in the resolution of any tax dispute which involves acting as an advocate, because that would create the advocacy threat also. Now internal audit, again very important. These are certain points that are important. I have already highlighted it over here. Internal audit for PI, prohibited if it relates to internal control, that is ICFR, financial accounting system, that is financial statements, amounts of disclosure that relate to financial statement, prohibited. You cannot do so. Otherwise you will be acting as an internal auditor, you will be acting as an external auditor, and then you will be using the work of the internal auditor for the purpose of the external auditor that we will be discussing in later chapters. Now that is going to create chaos, and that is why it is not acceptable. But for non-PI, the services may be performed by professionals who are not audit team members, because in non-PI cases, a lot of times the work of the internal auditor is not used by the external auditor for the purpose of public interest entities. Now IT system services, IT system services as in the technological part. A firm cannot provide services that involve designing or implementation of IT systems that influence the financial reporting. What if they want to apply certain procedures over their purchase process, not involving the finance, just the operational part? Now our firm, if they have a tech department, they can help them. So form part of ICFR or generate information for the client's accounting or auditing or financial statement system, then it is not acceptable, otherwise it is acceptable. Recruiting services, that is you are helping the client in recruiting certain personnel. So following services are prohibited for any audit client, not just PI, any audit client. Searching for candidates, undertaking reference checks, recommending, advising on terms of employment, okay, it is not acceptable. Sir, can the client come to us and say that please help us hire somebody for the finance department? So let's see, for positions of director, office or senior management, it is not allowed, but if it is for finance executive, they can. Why, sir, not senior professionals are allowed? Because they'll have to look over, they'll have to oversee the responsibilities that are in finance. So if they appoint somebody, there could be familiarity threat also, that is why it is not allowed. Now corporate finance services, following services are prohibited for any audit client: those involving promoting, dealing or undertaking an audit client share, those whose effectiveness depends on a particular doubtful and material accounting treatment. Safeguard separate team members and independent reviewers could be used. Now long association of senior personnel, so may create familiarity or self-interest threat for a PI. An individual cannot act in following roles for 7 consecutive years. An engagement partner, 5 years cooling off period is there. The individual responsible for EQR, engagement quality reviewer, that is 3 years. Any other key audit partner role, 2 years is the cooling off period. These are what? These are cooling off period. Please remember it. You have to remember it. Okay. Do you have to remember the years also? Yes. Now, if an audit client becomes a PI, the timing of rotation depends on time served. If you have already served for less than 5 years or equal to 5 years, then you can continue for 7 years minus years already served. So say you have served for 2 years. So 7 minus 2, 5 years you can serve. If greater than or equals to 6 years, may continue for 2 additional years from the date of the audit client becoming a PI. Now, or other entities, consider extent of duration, work, seniority, nature, etc. Safeguards: rotating senior personnel could be a safeguard, review by an experienced personnel could be a safeguard, and AQR that you must have studied in AA, that could be a safeguard. Employment with an audit client. Employment with an audit client. Can any member of the audit team or the firm negotiate their employment with audit client? Yes, they can. May create self-interest, familiarity, or intimidation threat also sometimes. When a partner or audit team member joins an audit client in a position of influence, say director of finance, say CFO, say finance controller, the firm must ensure no significant connection with the individual is maintained. That is, that person, even if they are the best employee of the firm, they should not have any professional relationship with the firm. A firm must have policies that require audit team members to notify the firm when entering employment negotiation with an audit client. That is, firm should have a policy that if any particular person is negotiating their employment with the audit client, they have to inform the firm about it. Safeguards: review of significant judgments made by the members, and AQR could also be there if they are joining the business. Now, close business relationships may create self-interest and intimidation threat. No safeguards unless financial interest in the material. So, do we need to remember this word by word? No. But whatever I have highlighted important, you have to remember that word by word, and here you just have to understand that what is the judgment that you need to take, and you can mention that judgment in your own words if it is asked in the examination. Now, may create self-interest and intimidation threat. No safeguards unless financial interest is immaterial. The auditor must terminate such relationship and decline any relationships offered. When I talk about the recent services, so may create self-interest. So, should not include an individual who served with the audit client during the period covered by audit. Say, if somebody from the client company, they want to join us as an auditor, you should not use them as a resource in the audit of that particular company for that particular year where they have served in the finance team of the client. Okay. This is completion of one significant portion. Now, let's come to some of the last few pages, say last 5-6 pages of the chapter, and we will be covering in next 5 to 10 minutes. Serving as a director may create self-review and self-interest threat. Partner or employee of the firm not allowed to act as the director of the company. Now, serving as a CS is also prohibited. CS is in company secretary. The secretarial service is prohibited unless permitted by law or management makes all relevant decisions, and they are just going to record it, and duties are limited to routine work. This is also something that should be important, okay, and I am highlighting it as well. Now, breach of independence provision. What if independence provisions are breached? So, the firm must end, suspend or eliminate the interest or relationship that created the breach. So, say some party, they have negotiated, some member of the audit team, they have negotiated the employment with a client, but they have not reported it. So, either you should end the relationship, suspend or eliminate the interest, that is, you might remove them from the audit team. Consider whether there is any legal and regulatory requirement to report the breach. Promptly communicate breach to the engagement partner, those responsible for firm's independence. This could be done by any team member. Those subject to independence requirements who need to take action. Sometimes the other team members also, that if they are also doing it, they should report it immediately, and sometimes ACCA also, if there is breach of the ACCA code of ethics is also there. This is also important for you to remember. Now, evaluate the significance of the breach and its impact on firm's objectivity. Take action depending on the significance of the breach. My dear friends, we are covering everything, and that is why we are being very quick here. If you like this video, please like this video, please share this video to your ACCA friends in your ACCA channels as well, and if you want these notes, please join our Telegram channel. I would be happy to share the link of the ebook with you, and you will be happy to receive it as well. So now, my dear friends, let's complete last few pages of this particular chapter, and I wish you all the very best for the next study. Now, after this, what you should do is you should ideally do your self-study and let me know if you have any queries. But let's complete it first. Actions that the firm might consider: removing the relevant individual from the team, appointing different individuals to conduct an additional review, recommending the audit client to engage another firm, and if breach relates to non-audit services, engaging another firm to evaluate the results of non-audit services also. Discussion with Dosha governance. Action cannot be taken, action can be taken. If action cannot be taken, inform the TCWG as soon as possible and take steps to end the audit engagement. Whereas if action can be taken, discuss following with TCWG: significance of breach, how breach occurred, action proposed, and firm's conclusion that objectivity is not compromised and we can continue if we take this relevant action. This is also very important, how this should be communicated to those charged with governance. Let me save it first, then we will be moving further. Yes. Now, communication with those charged with governance. Communication with those charged with governance. So, the firm must communicate the following in writing to those charged with governance: all matters discussed in concurrence of TCWG action satisfactorily addresses the consequences of the breach, a description of the firm's policies and procedure, and the assurance that the objectivity has not been compromised and they can continue as well. If those charged with governance do not concur that the action proposed is satisfactory, the firm should end the audit engagement. That is, if those charged with governance is not satisfied that whatever action they are proposing that is appropriate, the relationship should be ended, the audit engagement should be withdrawn. Now, second opinion, if in case of any breaches, second opinion could be taken. When a professional accountant is asked for an opinion by the entity that is not an existing client, then you have to consider that person, that particular entity could be the client of another professional accountant, and if you provide second opinion which does not match with their opinion, there could be chaos. So that is why it is also called as opinion shopping. Client might come to you, may create self-interest threat unless advice sought is insignificant, and safeguards is obtaining information from current auditor with the client's permission. That is, you can communicate with the current auditor first that your client has come to me for the second opinion. Do you agree to it and do you accept it? If not, then please let us know if there are any reasons. Provide the current auditor with a copy of the opinion, whatever you have provided, to maintain professional relationship with your current auditor as well. Now, confidentiality has two aspects: improper disclosure and improper use. That is, whenever there is any breach of confidentiality, what could happen is there could be improper disclosure or improper use. That is, either you have failed to disclose certain information that you should have disclosed, or what you have done is you have used the information improperly. That is, you have used it maybe for personal interest which should not be used. When it is a case of improper disclosure, that is, you have failed to give the proper disclosure. Information obtained in the course of professional work should not be disclosed to third parties without first obtaining the permission of the client, unless there is a legal duty to do so or professional duty to disclose. Now, audit is allowed. Now, use of confidential information, if you have used it for your personal interest, must not use for a personal or third party's advantage. As a best practice, must not deal in shares of the company with professional association, as it might appear as using confidential information. Even if you do not have any confidential information, it might look that you have used some confidential information to gain advantages, and that is why you should refrain. Now, conflict of interest. Conflict of interest could be two: between professional accounting interest and the client interest, or there could be the interest of two or more clients. So what should happen when there is a conflict of interest between the client and the auditor? So, should place client's interest before their own, should not accept or continue the engagement if significant, and any financial gain that arises should always be considered significant. Now, safeguards. Disclosing to a client if any commission would be received with the amount and advance permission to accept. For example, if they refer somebody and they receive some commission, that is also a conflict of interest. So they should disclose that if I refer you to this particular person, I might be receiving this much of amount. Do you accept it? If yes, then you can continue. The interest of two or more clients. The relationship with existing client must be considered before accepting a new appointment. For example, if there's some information that has been brought to you and your professional advice is seeken over there, and now the existing client that you have might be disturbed, might have impact over it, negative impact over it, then you have to consider the situation of the current client before accepting this new client. A relationship that ended more than 2 years ago is unlikely to lead to any conflict, so you can work. Now, all material conflicts, here we are talking about the professional relationship. So all material conflicts should be disclosed to relevant clients so they can make informed decision. Safeguard separate team members and appoint appropriate reviewer could be there. Now, responding to nuclear. What is responding to nuclear? So the problem is to act in public interest without breaching confidentiality. That is what is the problem. That is, you have to act in the public interest also, and you have to protect the rights that you do not end up breaching the confidentiality provision also. So what are considered as non-compliance? Acts of omission or commission, intentional or unintentional, committed by a client. Those have a governance which are contrary to laws and regulations. Now, may have a direct effect on determining the material amounts in the financial statements, may be fundamental to the client's ability to continue as well, may have wider public interest implications if it may cause substantial harm to the stakeholders as well. Now, with this we have completed this particular chapter, and like we have discussed, we have completed it in approximately 40 to 45 minutes. Okay, exactly, to be exact, around 41 to 42 minutes, and this has been quite an achievement because this is one of the biggest chapter of your entire AAA syllabus, but we have covered it and I hope you have understood everything. Now, my dear friends, if you have any questions, I would be happy to answer it, and I have kept my pace little faster so that we can cover everything. We have not skipped even a single line here, yet we have covered everything in just 1 point, or I would say 1 hour 45 minutes. We have covered 3 chapters. Okay, so this is really important for us to understand that everything could be done if properly planned. Now, if you like this video, please hit the like button. Please share this video with your friends as well. Whosoever is pursuing ACCA, please share it with them. Please join the Telegram channel for the purpose of notes, and whatever your feedback is, please let me know on the chat box. Please let me know in comment section. I would be happy to hear your feedback, my dear friends. I hope this video would help you, and now we are going to conduct 9 more sessions where we are going to cover the entire syllabus as well as the question solving and test as well. So my dear friends, I am hoping to see you all in the next session as well. Thank you so much.